Hello and welcome to today's video. Earnings are settling down little by little, and today I will cover the latest results and earnings call highlights from AI companies, Palantir and Coreweave to be exact. Without further ado, let's start. Before we start, disclaimer, nothing here is a financial advice. I'm just one person with a microphone. Always do your own research. Latest results show that the company's revenue backlog has grown to more than 55 billion. Year over year, revenue more than doubled, reaching 1.36 billion. It is important to note, however, that operating expenses increased sharply to 1.3 billion. This left the company with operating income of only 51 million, translating into 4% operating margin, a significant drop from the 20% margin recorded a year earlier. Another key highlight is the series of major partnerships they have secured. They entered a multi-year agreement worth approximately 14.2 billion with Meta and expanded their collaboration with OpenAI to roughly 6.5 billion. Combined, total commitments now stands at around 22.4 billion. What stood out for me in this report is the continuation of net losses. For the first 9 months, the company posted a loss of $1.82 per share, while stock-based compensation continues to rise. Now on to price action. So price action was rough for Coreweave stock as it dropped more than 25% in 1 week, and it is now trading at an extended lower band of the Bollinger. Now on to some important highlights from the earnings call. So when speaking about customer and demands metric, the number of customers generating more than 100 million in revenue over the past 12 months tripled compared to the last year, and no single customer accounts for more than approximately 35% of the revenue backlog, compared to roughly 50% in the previous quarter and about 85% at the beginning of the year. The acquisition of the Core Scientific had not been finalized by end of the reporting period. On to profitability and performance. So adjusted net loss for Q3 was 41 million compared to roughly break even in Q3 of 2024. Adjusted EBITDA margin for the quarter was 61%. On financing and liquidity, so year to date Coreweave secured 14 billion in combined debt and equity financing, and as of September 30, the company held 3 billion in cash equivalents, restricted cash and marketable securities. On the outlook, so revenue is expected to fall between 5.05 to 5.15 billion. Adjusted operating income is projected to be between 690 million and 720 million, while the company expects to exit 2025 with more than 850 megawatts of active power. Interest expense is forecast to range from 1.21 to 1.25 billion, reflecting higher debt levels to support demand-driven capital expenditure. Now on their capital expenditure plans, so capex for 2025 is projected to be between 12 to 14 billion, and in 2026 they expect to significantly exceed the 2025 levels. And lastly, management indicated that power availability is sufficient for now, is expected to remain adequate for the next few years. The main bottleneck lies not in the raw power, but in the availability of powered shells. Infrastructure is considered fungible, allowing capacity to be transferred from one client to another if necessary. Now on to Palantir. So Palantir delivered another strong quarter, highlighted by exceptional growth in the United States. US revenue rose 77% year over year to reach $883 million, while total company revenue expanded 63% over the same period. The company closed a significant number of large contracts, including 204 deals worth at least $1 million, 91 deals worth at least $5 million, and 53 deals valued at $10 million or more. Income from operations came in at $393 million, representing a margin of 33%. And net income reached $476 million for a margin of 40%. Adjusted earnings per share were 21 cents. Palantir ended the quarter with a strong liquidity position, holding $6.4 billion in cash and cash equivalents. Now we can see that price action was rough recently, as the stock is now trading at a fair valuation, as observed at least from the Bollinger Band perspective. And some highlights from the earnings call. So artificial intelligence platform is positioned as the only platform delivering true transformational impact with a clear plan for compounding enterprise-level AI leverage. Q4 revenue guide is 1.32 billion, reflecting 13% growth quarter over quarter and 61% growth year over year. Full year 2025 revenue guidance midpoint raised to 4.39 billion, representing 53% year over year growth and 252 million, increase from last quarter guide. US commercial revenue for full year 2025 now guided to exceed 1.43 billion, implying at least 104% growth year over year. Adjusted free cash flow on a trailing 12-month basis reached 2 billion for the first time in company history. Revenue from certain contracts is expected to decline to 2 to 4 million in Q4 of 2025 compared to 9.6 million in Q4 of 2024, and to contribute less than 0.5% of total full year 2025 revenue. Share repurchases reached 2.6 million shares year to date, with 880 million still available under the authorization. Companies continues to expect GAAP operating income and GAAP net income in every quarter of 2025. And lastly, some closing thoughts. When we look at the hyperscalers, it is clear how tough the business really is. CoreWeave is a good example, as revenue keeps climbing but capital expenditures rise just as fast, which results in continued losses on the balance sheet. On the other hand, Palantir continues to thrive with its smart platform and integration services, yet the market still punishes the stock even though there are no real signs of a slowdown. Okay, this is it for today's video. If you want full written deep dive on this topic, check my Substack. Also, you can check my X for daily updates and market insights, and for more educational content, check my website. Like, subscribe as a sign of support, and see you in the next video. Bye.